Welcome to today's edition of 600 Seconds of Trading. Today is July 31st, 2018, and my name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. We're going to take a look at the markets that we usually do at this time of the day in the live trading room. I want to start out though by saying hello to Hai and also to Maurizio. Thank you so much for joining me in the chat box this morning. If you guys want to join, anybody else that is watching, just make sure you have a YouTube account, and that will allow you to comment as well. Don't forget to hit the like button, smash that like button. If you like the presentation, don't forget to like the video. Let's begin, but before we look at things like the euro, Bitcoin, gold, crude oil, and DAX 30, I need to start with stressing that trading financial markets unfortunately present a risk to our capital, and we could potentially lose all of our invested money. As well, why should you pay attention to me? Well, I've been trading since 2006, but my first job was with a broker in 2005, and already from 2005 I started to learn about the markets, and then started to trade my own account in 2006, went back as well to university, and studied economics, a bachelor's and a master's. The master's I completed in London, and in London, this is really the capital of Forex. There's numerous amount of brokers here, and hedge funds and traders in general, so that's where I'm based, and I am profitable since 2014. I had some mixed success before that, a few positive months, a few negative months, but it's really from 2014 I can say, like, look, from that time on I started to make money and continue to make money when trading. So hopefully I can teach you one or two few tricks on how to trade the markets and how to interpret the charts. Okay, let's kick off, and we're going to kick off with the euro, and the euro is trading sideways between the June low and the July high. And the different interpretations, this could be a symmetrical triangle, this could be something different, like just a normal range. Now, this break, if we would have a break from this range, would be the beginning, of course, of a bigger move. And some people like to get involved at these opportunities. However, though, I don't really like patterns that look like this. I prefer patterns where you have horizontal support and resistance, and because they're usually just better quality as well. It is the 31st of July. I know we have the Fed rate meeting tomorrow, and then I think we have the non-farm payrolls on Friday. So yeah, of course we will potentially have a break, but if we don't have a break on the back of those numbers and the rate meeting, I think it's going to be a difficult August, even more sideways trading. So from a tactical perspective, what do I like? Well, I'm bullish on the Fed. I'm hawkish. I think they might surprise the market a little bit, being more hawkish, but I want to look for a break to 115.07. I know it's boring, but the situation here as well was really boring in the beginning of the year, from January 26th all the way up until March. April, sorry, the market was trading sideways, and then the market traded to the downside, okay? And we were bullish here, and they tried to go with the flow here. But then eventually, when we reached these levels here, I literally said, forget about this. And then eventually, you had a nice move, a nice decline here of about 630 pip. And maybe we'll have something similar, another 500 pip or something like that to the downside. Alternatively, we can have maybe 200-300 pip to the upside, and then we'll see what happens. The reason why I don't really think we're going to trade much higher is because from a macro fundamental point of view, I think the outlook for the dollar is better than it is for the euro. Here's Bitcoin. Bitcoin is starting to get a bit tired. Not much has happened with the bullish trend, but it is a bullish trend. So the last setup I shared with you guys was that I said people are probably going to buy here for this price to go higher. So far we haven't seen too much of a reaction of that, and the only thing we had here is a spike on the price feed of Bitstamp, And I think if we go back down to these levels, again, I think traders are going to look to buy. Of course, if you bought on our first idea up here and you're actually still hanging on to it, and if you're more of a scalper than a holder, then maybe offloading a bit here and buying a bit on a dip, I think could be better. The market did have a nice run from low all the way up to today. That's 33% return. It was almost up with 40% at one point, so it's not a bad move. It's a bad move if you have $500 in your account, but if you have thousands, then 40% is a decent amount. Here's gold, here's the dollar. I maintain a bearish bias. There's no reason to change that bias now because the trend is still bearish. You can see we're creating these lower highs. Loss setters was, I said, people probably gonna try to sell at 12,125. I'm sticking to that idea, but obviously things are slowing down a bit. To see an acceleration on the downtrend, we need to see a break to 1,215. Take that out, and I think we can reach the July 2017 low. Here is crude oil, and as you know, we were trading sideways between 67.03 and 69.95, and I said if we take out this upside, we probably can see a bit of a move. Now, even if that was the case, it wasn't like an optimal sort of buy here, keep it, because the risk reward ratio was not that good, and that's why I have this corrective move. I just took a Fibonacci. You see double bottom, that's my new trend defining level. Took a Fibonacci like that, so I'm looking for a little bit less than a 50% correction. You can see the levels like this. So I'm just looking for a corrective move to 69.49, and then down and potentially up. Okay. And as for target, I think maybe we hit the next high, which is 71.66. It's not like a best sort of strategy or setup. In fact, right now there's limited things I would like to trade. I'm holding one position, and it's none of the markets we just talked about. German DAX is moving lower. From a trading perspective, it makes sense because we're relatively close to the highs and relatively far away from the lows. So from a risk reward ratio perspective, it didn't make too much sense for people to necessarily buy up here. Obviously, it's not going to stop people from getting squeezed out, but any new positions should be initiated in a corrective move, much like crude oil. So here, I suspect the market can, decline 50%, and I think traders might look to start to buy around here. They'll put a stop just below, so that's a 1.7% max loss for a potential return of maybe 2.6. maybe a 3.4, depending on how high this goes. Are there any challenges with this market? Yes, it's trading sideways on the daily chart. So unless you know what you're doing, it's better off not trading this. There are other things that are better. If you happen to be bullish on stocks, then the US 30, so the Dow Jones Industrial Average, I find that more interesting than other things. It's definitely under pressure, but we had a bullish breakout here on July 25th. Took out that level. Now we have that corrective move, and as long as trade above the low from July 25th, this is still a bullish breakout, and we are correcting now. And we are in the buy zone now, where I think traders will look to get involved. Obviously, take out this level, we can trade to the downside as well. If you take a look at the S&P 500, if it takes out its July 17th low, then there's a general risk that you have a bigger correction, because then you would have the end of a short term in the Russell 2000, NASDAQ, S&P, and the Dow. So then you could have maybe a steeper correction. Maybe we trade all the way back down to the June low, I'm not sure. But it would be a sign, at least for me here, that it's time to take a step back and not be long, at least US stock markets, for a while. And those are the markets we provided in our overview. There's of course a ton of other markets that you should check out. a simple strategy, a simple thing I do is that every morning I go through absolutely everything, and I try to build sort of trade cases based on technical analysis, trend following. So you can do all of that, and then you just choose the 2-3 best ones and then just trade those. I'm not married to a specific market because I'm trading a trend. And for example, with the euro, you had that big decline here, and most markets will give you maybe 1 or 2 very obvious trends and trades to trade every year. Here, for example, this was an obvious one when the market just traded to the downside. It was a nice, cool, I think 600 pip, 649 pip. In 2017, it was a bit difficult because the market was trading sideways in the euro. But at the end, you know, if one would have grabbed it, you had a nice push. Maybe when it traded above here, at the end it went up with about 1,000 pip, right? Even though at least I thought the market was going to trade sideways between these two levels. So there are opportunities in all markets. It's just that, and then you just need to be on the lookout for them. You know, what are the big moves? Like, when are we going to have a break? And that's how I operate. Okay, so S&P. Yes, you can buy the S&P right now, and so you can buy the S&P. And the thing with the S&P is that it's just very close to the stop level. So there's 2 things we need to deal with when trading, which are important. They are probably the second one is more important than the first one. So what are these things? Well, you need to just take care of your account, which is the drawdowns. Like every time when you trade, you know, you're gonna have some sort of a drawdown, right? So imagine that this is your account. So you have time, T for time, and this is your equity. Let's make it like that. So obviously when you trade on the first day, you have a winner, then you have a loser, then you have a winner, and then you have a loser. And sometimes, you know, you do something like this and then it trades sideways for a while, right? And then when you stuck like this move here from this high to this low, all the way until the break here, that's what's called a drawdown. This is what's called a drawdown. So obviously you need to make sure when you trade that you don't experience too steep drawdowns. And then you have the mental thing. And the mental thing is you need to ensure that you're happy, happy and sort of done, stressed and comfortable with your trading. And that I would call that the mental drawdown, which is something important. So with I was long myself, by the way. So I was long from the breakout. So I was long from pretty much here on July 12th. And the market moved up, down, and all the way up. And I was almost up. I was up with about 1.75 times my risk. So almost a risk-reward ratio of 2. And then my entry was actually at 27.98, which is pretty much here. So I actually decided to move my stop loss to break even yesterday. And so I'm not long this market myself anymore. Why? Because I would think I would be quite frustrated to see something in profit the way it was in profit and go down and give me a loss. My stop loss was initially down here, and then it was reduced to this level, and then to this level, and then down here. So I'm not long because I wanted to, in essence, just protect my mental state, sort of remain open about new trades. And that's it, really. Technically here, though, you know, we are above the low. It is possible to buy at these levels, without a doubt. The only issue, though, is that we're extremely close to the stop level. And usually when the market moves really close to my stop level, the market will try to take that level out. I would prefer the NASDAQ, not the NASDAQ, the Dow Jones. We're further away from the stop level, but it's still here from this perspective, it's just a corrective, just a move down 61.8%, almost. So it's not that bad. Whereas with the S&P is corrected almost 100% of the move, which is a bit of a warning sign. Got a question about the Aussie stock market. So let's take a look at it. I think it's called like this. So this is the Aussie stock market, and technically there's nothing wrong with the setup. So this is a daily chart. So I'm treating this like a big rectangle, even though probably some people would say it's not, it's an ascending triangle or something like that. If we treat it like a rectangle, then the difference between the lows here from 2017 and all the way up to the high here from January, that will be the target, like that. And I did buy here, but the market moved up and down, and then it started to get really wobbly, and it doesn't really know exactly if it wants to go up or down. So I actually got stopped out here for a small profit. Well, actually I think it was break even pretty much down here. Technically, again, the trend still remains bullish. You have a low here at 6,200, which could act as support, but it didn't really work out, did it? It's very choppy. To explain something different, which I did hold, and I actually made some good money on it, some 8% return, is the Indian stock market. This is many times had some warning signs, but much better setup. So here's the Indian stock market, and you had an ascending triangle, which is sort of the difference between the low and the high, and sorry, you can connect it like that, and then you have resistance. Some people are going to measure from here to here. Some people are going to measure this section here. I prefer this section here because that ensures, I know the targets are less aggressive, but at least you hit your target. The other ones, it's very difficult to hit those targets. So here I bought and quickly went into profit, and then down, and then I know it was a little bit difficult, but it didn't take too long time before it moved up like this. And I got out, when did I get out? Let me see. Here, on July 24th. So you see here, I bought here and got out here on July 24th, around 11,286. So this is really the ideal entry. Obviously not, a little bit too much sideways for my liking, but still up and then further move. If you look at the Australian stock market, it's still very choppy. So I didn't even bother to get involved again because of the choppy conditions. Good morning, Antonio. I hope you're doing well. Okay, good. So yes, to summarize, S&P good entry. Yes, from early reward ratio it is. There are some warning signs though, might be stopped out. Aussie stock market, the trend and the pattern is still in play. However, though, it's a bit too choppy for my own liking. And that's pretty much it. I don't have any more questions. I'm gonna wrap things up. Don't forget to like the video, and please, if you follow me on Twitter, please retweet the content that you like. It's always good. It helps to spread the word. Have a good day, guys, and I'll see you guys tomorrow at 9 a.m. London time. Thank you.